Okay guys, so I have the weekly chart. Let me change my label here. This is the Eurodollar weekly, and it's one of the things that I was talking about in the analysis is that we're finally seeing some type of movement in the euro, because for a while price broke up above that level and then pretty much just sat still, not really making any ground as it was sitting right on top of this level. So now it looks like we're finally maybe making a move back down. Obviously we have some ways to go before there's any legitimacy in that move. But as we talked about before, this range, even from 131 down to 126, is a pretty nice range. Definitely worth trading in if you get a good price. So any type of continuation through the bottom of this zone, which we're basically getting there now, could be a great trade back to the bottom of the zone here. And obviously there is some confirmation of support at the top of this level. You can see this point here. Also some confirmation of support near the bottom of the level here. So there's definitely some clustered in levels of support around 127, 127.50, all of that. Which typically means that you're going to hide your target slightly in front of those levels, so you don't have you don't get stopped out, or excuse me, you don't get bounced out of the trade after having a lot of profit locked in. Now, there are some people who, like me, think that there's potential that the U.S. dollar could really strengthen throughout the 2013 year, depending on how things again go in our economy, which means that this move from 131 could really set a move going all the way down to 1.2 and even lower, potentially. Now, obviously, if that's if your trading plan is going to be to capture that long of a move, it's going to require a great deal of patience. For instance, even if you shorted up here, you took a short at 147, and your target was down here at 121 or 122, obviously this is a great trade and it would hit your target. But for you to hang on to a short during all of these several hundred pip pullbacks is, in my opinion, one of the most difficult things to do as a trader. That's why the typical trader is going to actually look to short here and take profit down here, and then short again here and take profit here, and then short here and take profit here, and short here and take profit there. That way you have, you're holding the trade for less of those pullbacks, and typically you're going to make a lot more pips if you catch it on each new high. Now, the difficult thing is that it's difficult. You can't, catching each pullback and not getting, not catching it too early and then getting stopped out is incredibly difficult. And that's why there are a lot of long-term traders who are looking at these weekly and monthly charts, holding trades for 3 to 6 months, who are definitely very successful because they don't have to worry about these, intraday and even weekly moves. They're not worried about, 300 pip weekly bar, because their target is 1,500 pips away. And these are typically traders who are not looking at their charts every day. They're traders who create a very long-term sentiment, looking for these 1,500, 2,000 pip targets, and they make trades maybe once or twice a month, and normally that trade might be adding to a current trade, not even making a new trade. So that's really the type of strategy you have to have if you want to achieve these massive winners. For me, it's not something that I've ever been able to do. My biggest winning trade that I can remember is around 500 pips. So obviously, I'm not hitting 1,500 pip winners. But nonetheless, there is some very long-term potential with this dollar strength. Assuming that the economy really does remain poor, and and there's a lot of stock market depreciation and all of that. Anyway, that's kind of what we have going on the long term of the euro dollar, and it'll be interesting to see if we can get through all of this clustered in resistance, which is kind of packed in all the way. Let me see, all the way down to here. So that's another issue with trading this, is that you look at the zone that I have drawn here, and you might think to yourself, okay, price is getting below here. It's an obvious short right below this little zone. But the issue is that we have all this support still packed right into here, so that's going to create an issue as well as price is moving lower. It's very possible that it could get right to here and then bounce to a higher high. So, guys, one of the most difficult things about trading, in my opinion, is that even when you're in the right direction, even if you catch a reversal and it moves down, there's no, every level of price is going to be a new area of support. For instance, we have this level here, which is going to be a support that you're going to have to look out for. And then you have this level here, of course, which is going to be support. And then you have this level at the bottom here, which is support. And then you have this level, of course, at the bottom of our zone, which is support. And then this level, which is just a little bit lower, which is support. And then you have, let's see, this tail that corresponds with that top there, which is support. And so you talk about these long-term moves, and you can just see for price to get all the way through here, it has to fight through all these different areas of support, and that's only counting these recent little bottoms. It's not even, if you count all the ones from time past, which you also should be looking at, it's going to look more like this with all this support, and you're going to have an even more difficult time getting through. So one of the most difficult things in trading is saying, okay, there's a decent amount of momentum, and I know that there's resistance or support in the way, depending on which way you're going, of course. But I'm taking the trade because there's a high probability that I can get through these minor levels, and up to my next major level. And that's really what, in my opinion, trading comes down to. It's price is always bouncing between levels. Now, obviously, there's times where price is crashing through levels, like the yen across the board right now is crashing through levels. But typically, as the market moves, it's bouncing through the levels, and it's also crashing through levels. So, this move from here to here, okay, it bounced off a level, and then it crashed through a few levels, and then it bounced off another level, and then we got down to here, and it was more bouncing. And then here crashed through a few levels, but stopped obviously at a level here, actually, is the level, and bounced. So what you're looking for is, or what you're trying to really predict when you're trading, is which levels it's going to crash through, which ones it's going to bounce off of. And so because the market has that degree of randomness, you never know which levels it's going to break through. It makes the probability of trading very difficult. So one thing, the most obvious thing that you can do as a trader to increase your odds is use these levels to your advantage. So for instance, let me move the chart away here. Yeah, I'll use a thick line to represent a major level. So you have a major level right here. Okay, this is a big level of support in the market. Okay, and then you have some smaller levels that you've pointed out here and here and maybe here. Okay, so then you have some smaller levels of resistance. Okay, well then you have some really small levels of resistance that are all through here. These levels are basically everywhere because prices turn around at pretty much every price at one point or another. So you have all of these minor levels. Okay, so as a trader, what we're going to do is say, okay, I know that there are all these major levels, and they're definitely going to affect the trade. And if I take a long here, it might bounce a little bit at each level, especially once it gets to these levels. It might bounce a lot, and then it might test around them, and then it might get up to a new minor level, and then it might test another bigger level, finally get through, test some minor levels, and then eventually get toward my next minor level and break through that as price struggles. And then obviously once it let's assume that you're targeting the next major level, which is what you should be doing. Okay, so then it's going to get to your next major level, and that's going to be your target. So between here and here, this major level and this major level, that's going to be your trade. That's the amount. That's the movement that you're looking for. Because you want to use major levels to get into trades to protect yourself, and you want to target major levels because they act as kind of a suction cup to pull price in. So what you want to do on a typical trade basis, now again, this is pretty general, and of course it's going to depend on your strategy, but for me, what I'm always looking to do is get in, see a good price action signal, and then hide my stop loss me get a straight line there. Hide my stop loss below this major level. Okay, so that means that you know, I'm increasing my probability. I don't know if price is going to be able to get through all these levels. No one, you know, it might get to the first little tiny minor level and reverse 500 pips all the way through my stop loss. But regardless of how it's going to react at these levels, I know that this big support level that I'm using as my trade guideline is going to increase my probability that even if price you know, begins to reverse at some of these other levels, that I'm going to have a good chance of this bouncing it and keeping it intact, even if it continues to get tested, and that eventually the probability shifts in my favor as price goes higher, and perhaps makes it toward my next major level or my target. And obviously, you know, a price going from where you enter to your target is how we make profitable trades. So the point here being that, you know, with all of the resistance, all of the points of price, you know, support and resistance is a very tricky thing because there really is support and resistance everywhere. I mean, every tick of the chart is going to have some level of support and resistance. So, you know, in talking about levels, the key is going to be trying to use these levels to your advantage and to increase your profitability rather than to hurt your probability. Because, you know, you might look at a trade and say, okay, with all these little levels that I've drawn, how could you possibly have a decent probability of price getting all the way to this level before it comes and takes your stop loss? And the answer is that the probability comes from the fact that you're using a stronger level to push price up than the minor levels that are in between. Now, obviously, if my stop loss is here and I have this much room between my entry and my stop, and my target is here, I'm still, you know, the probability is still going to be that I'm going to get stopped out. It's still going to be, you know, a 70% chance that I get stopped out or whatever. But, you know, if your stop loss is this tight and your target's that big and you win 30% of your trades, you're going to be very rich in not that long of a time because the risk-reward ratio in a situation like this is pretty incredible. So that goes back to that balance of what your risk-reward is, what your profit potential is, what the probability of the trade is, and what levels you're using in a trade. So for instance, if I'm taking a long here and I have, you know, a 30 pip target and I want to target, you know, 400 pips, like this, you know, this might be a 400 pip swing. Okay, well that's fine and dandy, and there might be a level here that you're looking to target that 400 pips, but if you're targeting a level there, but there's a major level here, then you're not trading wisely. You're just, the only reason you have a target up here is just because it's a great risk to reward. It's not because the market actually agrees with this target. The market doesn't agree with this target if you take a long here because your next major level is here. Excuse me, your next major level is here, which means your target should be here. There's no sense taking a long and just ignoring you know, a major level in the market just because you want to target a higher price. Now, of course, there's a chance that it could break right through there, but that's killing you know, the logic of the trade, the probability of a trade. You have to pay attention to your levels, and so this might hurt your risk reward. It might, you know, cut it in half, but it's tripled your or quadrupled your probability of a winning trade because the probability of price, you know, not hitting the stop loss before it goes all the way up to here is already low enough, let alone putting a major, you know, major level in the middle of it and just trying to assume that price is going to break there just because you want to have a good risk reward ratio. And you know, I think that's one of the biggest mistakes that traders make. You know, they take a trade, okay, they have an entry, they take a trade, it's a good signal setup, and their stop loss is 30 pips, okay, and they want to trade at the 2-to-1, so that means their target is up here at 60 pips. And that's all the logic there is to their trade. Okay, my stop is 30, so my target's 60. Well, your stop is 60, but what if there's a major level in the market 40 pips away? Well, then you just shifted your likelihood. You might go up and profit 40 pips and then see a massive reversal, and that's to be expected because there's a major level in the market. But you have your stop or you have your target 60 just because you're trying to trade with a 2-to-1. And I agree that 2-to-1s are great, but only if they're actually based on the market. You know, we're trading based on the market. You can't make trades based on the market and then make targets based on however you feel and whatever you want to happen. That's a sure way to get yourself, you know, into a lot of losing trades. Okay, so that's how we have to, remember these levels in the market, and make sure that we're using them in a logical way to help our probability of winning trades and not hurt it. Okay, so that's my rant on the levels. I just want to draw your attention to that, because I know for me, I'm looking at some of these long-term charts and talking about the potential major moves in the market, but you can't just ignore levels, because that's gonna. I mean, it's gonna make you lose trades. That's all there is to it. I could be a little more fancy about it, but the simplicity of it is that it's going to make you lose trades. And that's a good point, Glenn. I would define the major levels the way that you see them on your chart, because hopefully, if a group of traders are looking at the same chart, they're going to pretty much identify all the same major levels. That's that's what you would expect. But obviously, certain people use other things. Some people use fibs, some people don't. Some people use pivot points, some people don't, and so that will affect it. But I would probably define a major level, Glenn, as an area that has been tested multiple times, 3 or 4 times on charts above the daily and above. So like weekly levels that have been hit and reversed at 4 or 5 times. To me, that's a major level. And then I'm looking for those levels to also correspond with things like Fibonacci's and pivot points. So that's how I would define a major level. I've never actually defined it in my own trading. I've just looked at the charts and seen, okay, it hits here, 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 plus there's a fib level there. Okay, that's a major level. I haven't counted and said, okay, well, it hits at least 5 times, so it's a major level. I've just used kind of a how I look at the chart. Okay, this is obviously a major level I can see, in the market. That's like on the daily chart. We're talking about this whole zone. This is a major level just in recent times because of all the struggling and the bouncing that's happened at this level. And then if you scroll back a little bit, you can see that it has been tested in the past multiple times here, and then also here, and then there's a reversal here too. So it's about how you look at the chart, of course. But I think when you're taking a look back at the weekly and the daily and even the monthly, and you're putting some of these levels on paper, so to speak, the major levels become pretty obvious. So maybe I should define it with a certain number. Right now I don't. I just draw it and I see, okay, this one's not that major. I can see that there's a trend line developing here, but it's only been tested twice. But this horizontal area has been hit 10 times in the past year, and every or 9 out of 10 times there's been a major bounce or reversal in the market. And then to me, obviously, that becomes a very major level to be concerned with. Okay, so that's my little mark on major levels. I don't even know how I got started on that, but I think it's important that we're keeping that in mind, because again, I just think one of the mistakes that traders, especially amateur traders, make is setting up their targets just because of where their stop loss is, and that's simply not a profitable or probable way to trade. Okay, so then the next thing I wanted to do, as I mentioned first, was about getting feedback from you guys in terms of where you're at, what you expect, how you think you're progressing, all of that, because I'm trying to give you guys the most valuable information, the most valuable resources I can, but I need to make sure that I'm in check with where you are so that I can be more effective in what I'm trying to do. And while you guys give me some feedback on that, I will answer Fabrice's question. So, but please do give me some feedback. 1.5 and 122. Well, there's not a ton of data here, Fabrice, but I know for a fact from looking at the charts before that we have a level here at 140, 142 really is where it's at, and this is kind of a zone to it. It ranges from about here to here, but this is definitely a big level. You can see that here was a major reversal. It acted as support this whole time around, again, it's kind of a zone, but from like 140 to 142. And this whole big range is just a cluster of support and resistance, and then you can again see that a major reversal happened during this spike in October of 2011. So this definitely a big level around 140.50 to 142. Yeah, 135 as well. And again, that's one that, if you take this level right here, it's what they call a psych level because it's one of those round numbers and does correspond. It corresponds a little bit lower than 135 at this point. You can see it's like 134.60. But you can here, let me scroll back. You can again see that if you scroll back, there's some action on this level as well. Typically, these round numbers have at least some action. Here's a spike that was tested right around that zone. Typically the round numbers have some level. I don't know if I would consider this one a major level, Fabrice. I would note it because there is some, there is some points that are valid, but I wouldn't be pointing 135 out as a major level for price to get through, really, because it's been tested enough and it is a psych level, but it's not something that you can see over and over again has been an issue for price to go through when if there's a big trend. That it's just stopping in its tracks at the 135 area. Okay, so any feedback, guys? Okay, Steve said he's struggling to decide on a system. Yeah. Well, Steve, one thing that I would recommend doing is, just trying to piece the things that you like together and start from there pretty basic, and then work on filtering trades out and being more exact. Like for instance, pick a time frame that you like or a few time frames that you like. Are you someone who likes to use indicators, who likes to have that kind of confirmation? Do you like to use levels? Are you a big level trader? Are you trend? Are trends a big part of your trading? Do you want to use trends to your advantage, or do you like ranging markets better? Piece some of the things that you like together and just start with a template, a basic plan, and then of course, if you have tools that you like and you want to incorporate those, you could add those too. Finding a trading system is obviously a lot to do with what you're comfortable with and what you're confident with, as it is about the technical, probability of the trading strategy and all of that. And then, as I've said a lot, I think that the trade management and the money management and the account management is just as important as the entry strategy. So you want to focus on that a lot as well. But one thing, again, next week I'm going to go over a little bit of a strategy thing, and it might be helpful for those of you who are still looking for really a strategy that you want to make your own. This would next week will be a good session. So I know Glenn, yeah, Glenn, you said that you want more strategy info. You want to see specific trades and strategies. So we will definitely be doing that next week. Okay. Well, good. Guys, if you do have feedback and and there's something that you want or something that you think that we could do better, that I can do better, I really do look forward to you guys letting me know so that I can make the program more beneficial to you and more effective, certainly, because you guys have spent money and obviously time to be here, and so I definitely want to make that as valuable as possible. That's good, Mike. I'm glad that it's helpful and beneficial to you, and I think that you can you can certainly get a lot more experience in a short amount of time by being involved and being in the Skype group and watching those analyses and all that. I think that we have a good setup here to expedite that learning curve, and so I'm glad that you're here with us. And yeah, Fabrice, I love talking about risk management and trade management. Both of those things I think are really critical. So absolutely, we can spend time talking about that. One of the things that I'm going to hit soon as well is calculating how many trades you're taking and how much risk you should be taking, which is something that you posted an article on recently. So those of you who didn't see Fabrice's article, make sure you check it out. But I think that's also a really critical thing, is understanding the level of risk to trade. So I want to talk about that as well. Okay, guys. Well, again, if you have stuff that you want to share, that you want to talk to me about, please feel free, Skype me or email me or whatever, and I will be as available as possible to talk to you and try to improve what we're doing as much as possible. Okay, well, let's take a look at some charts, guys. Just do a little bit of analysis here. Get back into the market. Let me know what you guys see. And again, if you want to chime in, as I mentioned before, you can feel free to do that. So we already looked at this euro dollar on the weekly chart. I expanded this range down a little bit lower. You can see that it kind of comes down here with these points at like 130 almost exactly. So we really got a decent amount of movement left before it really breaks through the bottom of this range. From here to here is a decent amount of pips. So that's, for me, this is kind of like a no trade range. However, once it breaks through that, the one thing that we have to look at is, okay, potential target is going to be up here for the move to the downside. However, where you place your stop loss is going to be a little bit tricky here, because you don't want to place it all the way up here if you can avoid it, because that really is going to kill your risk to reward. If you end up entering the market here, you're at like a 1-to-1, if that, with a stop all the way above there. So one thing I would be looking to do, and I don't know if this will appear yet, but if price does come down, maybe it sets up a nice top here and then continues and gives us a point to put our stop loss above, rather than putting all the way to the top of the range. That'll be a great benefit to this trade, because then you increase your risk to reward ratio quite a bit. If it doesn't set you up with any type of level to hide your stop behind, you might either be stuck using a 1-to-1, which I probably just would avoid the trade, or that would be the other option, just avoiding the trade altogether. So that will be that'll be an interesting situation to just wait and see if we actually get a good level to put our stop behind. That's always something that I'm looking to see, because if it makes a level here, it tops up, tests, makes a level, and then continues, one thing that you might see is that it'll retest that level but not go the whole way through the range and then come right back down, and that way you'll have a safe stop. Obviously not 100% safe stop, there's no such thing, but at least you'll have something to go by there as far as the stop loss is considered. And Glenn, the congestion here, as it broke out of this congestion, the issue again is that we have all this cluster support. So there's a high probability that this thing, when it broke out, was going to head down and at least come to the bottom of this range here. So, or excuse me, sorry, I drew that line wrong. But at the bottom here, you could expect it to head. Sorry, let me be a little more accurate here. From here, as it broke out, probably to around the bottom of the range here. But one issue I would have is where's your stop loss go? Because if it's breaking out, there's no reason saying that it's not going to fake, come back, and then head down. So you might think about having your stop loss all the way above these points, which is it kills your risk reward a lot. And the other thing is that even within this range, there are some points where it could reverse. Now, I think that we're going to see it come down to at least test the bottom of this range. But anytime you're trading within a support and resistance zone, to me the probability kind of goes out the window to a certain extent, because you're in the range, you're in the exact type of market condition that you see bounces and reversals and choppiness. So I personally wouldn't trade into that zone, though I do think that if you're a smaller time trader, smaller time frame trader, and you're looking for momentum burst to the other side of the range, that there could be a good potential there. There could be a definite trade. For me, as I'm looking for a little bit longer moves, I would not be trading into the range there. So the euro dollar, it has potential. It's moving down. There's a nice reversal pin bar yesterday and some continuation today. But really, if you're looking to short the euro, the dollar might not be the best cross as of now. If you look at the euro odd, you can see that there's a lot more movement and momentum in the euro odd. Now, one issue is that we're coming right to this trend line. Yesterday in my analysis I talked about there was a possibility that we could get a bounce right here at the 50. It corresponded with some levels here. So this was the daily bar stopped right on the 50. There's some possibility that we could get a bounce from that level. You can see that that certainly did not happen. I mean, this thing crushed right through there and is now coming right towards our trend line. So when you talk about short opportunities, if we get a break of the euro odd below this level, it's going to be a really interesting signal. I mean, we could see price literally come all the way down here with a strong enough break, which is a massive move, of course. And if the euro continues to weaken, I don't think that's out of the picture. Now, obviously, the odd has not shown a lot of consistent strength, so it's difficult to expect the odd strength to carry it all the way back down. But again, that's when you kind of want to take a look at some of the longer time frames to see the potential. And if you take a look, for instance, at the weekly, you can see the amount of bearish momentum that this pair has behind it. So, to me, there's always bearish potential when you have a trend like this. By the way, my thing says daily, but this is the weekly chart we're on now. So I think that I think with some continuation of euro weakness and stability of the Australian dollar, the euro odd could be one of the better shorts. Now, I know that Mike is short on the euro odd and up a few hundred pips. So Mike caught it, pretty good entry up toward the top. A great trade by Mike, but the question is this about at its limit in terms of profit, or are we just at the beginning? Can this turn from a 300 pip trade by Mike into a 1500 pip trade? Yeah, I think it's possible, but you have to watch. Even in the amount of momentum on these longer time frames, when you have some momentum starting to build up, you have to be careful. It's you're always in a dangerous area when there's a recent uptrend. So this one is, just needs to be waited on if you're not short yet. If you're already short like Mike and you're up a few hundred pips, then you have some patience. You can wait for it to bounce and then hope it breaks. But I wouldn't certainly be shorting it now at the price we're at now, because you're a little late on the draw unless we see a break and some continuation. And then, if we get a break, and you can hide your stop loss above this level here, above the 50, and this level, let me draw a better line there, above the 50 and this level here, and you can target, maybe the next point here as your target, or even the very large target. This goes back to those major levels, and guys, on the Euro odd, because it's moved down the whole time, there's not a lot of sidewaysness. There's not a lot of major levels to worry about, which is one of the really nice bonuses. Like this level here, not even a major level, even though it's a point, where price came down to and turned toward higher highs. It's really not a major level. It's just a one pivot point, and not actually a pivot point in the way that pivot points define, but where price did pivot and move higher. So the Euro odd definitely has some bearish potential. I mean, there's not much more I can say. There's just a lot of potential. That's all it is right now, but we'll see how much continuation we get. Fabrice, would you short Eurodollar even if recent daily trend is up, or only wait for a long signal even if weekly trend is down, or you don't care? Consider both ways. Well, let's look at the Eurodollar, Fabrice. It's a good question, and I think that a lot of times it comes down to how you define trend. People are saying, oh, that's counter trend, or that's or that's with the trend. But I'm considering the Eurodollar pretty much a sideways market. It depends on where you really cap it, but I think you take the recent moves up through these levels. I'm considering the Eurodollar as a sideways market, especially when you factor in. Let me grab these lines. When you factor in the top here around 135. Let's see here. I guess would be the best way, and then about here. Okay, so since this point, which is basically a full year, we've had moves that have stayed up in this range. We broke through for a period of time here, and then went back up in the same range. So from here, which is like May to August, this 3-month period, price was lower, and even down here it was not. It remained relatively sideways. So basically, for 9 out of the past 12 months, we've been in this range, which I think is a relatively sideways market. So to answer your question, Fabrice, because of the current market condition, I'm open to both long and short trades. There is a recent up move here. It did make a pullback and continue, and that's from July. It's a recent up move, but overall I'm thinking this is pretty sideways, and I'm willing to take both directions here in an attempt to get into a good trade. So good question. That's how I would define it. Some people are a little more strict and would say, okay, the recent, they would zoom all the way up and say, okay, the recent up move just from here puts it in an uptrend, and so I'm only looking for buys. I'm not that strict about the market conditions. I think a little bit longer view gives you both long and short potential, which is what I'm willing to take to try to get into a good trade. And that's my take on it. And that kind of actually goes along with the Euro odd as well. The Euro odd is a pretty similar situation, because you have this up move again, which definitely creates some long trade opportunities. I would certainly not take away from a long term, or excuse me, a long trade opportunity, a buy, because of this upward swing from August till now. We've been in a pretty nice up move, but at the same time, you can scroll back and see that there's a lot of downward pressure in this market. So I think that the short trades have some validity too. There's this move here also, which kind of corresponds with, let me see if I can grab it here, kind of corresponds with these lows that it's bouncing off of, or excuse me, this trend line that's bouncing off of here. We had this point where there was a cross, depending on how you draw it, and it moved up here. So even in this situation, we're playing with an uptrend and a downtrend, and when you have that going on, I think there's probably potential. Well, I think there's definitely potential for both long and short trades. So it's another one of those examples like that. So Fabrice, more often than not, I'm going to be looking for both long and shorts if price action, it is continuing and setting up a long or short position. I'm not going to be too biased based on the trend unless there's a raging, raging trend that's been unless there's a raging trend that's been in play for a long period of time, and there's really no short momentum if it's a long trend, if there's no short bias at all. Like for instance, right now on the U.S. yen is a good example too, because of this upward move. Okay, I think that the yen has definitely moved down quite a bit, and there's some bearish momentum, and it's somewhat sideways as well. But because of this move, I'm not going to be looking for shorts right away. Now, if this comes down and then it starts ranging, okay, then it breaks lower, then I'll be looking for shorts. But I'm not going to be taking a short signal right off the top here to the downside because there's just too much bullish momentum. I mean, the market has moved straight up. So there are certain situations where I'm just saying, okay, I'm not going to take any. I'm not going to take any shorts. I'm not going to take any longs based on a current condition. But that's not really a very often occurrence. More often than not, I'm looking at the market conditions and saying, okay, there's potential here for both sides. Okay, let's see. The euro pound is another example that I want to look at. Let's see. We still do have this this trend. Now it depends on how you draw it. I always change my lines to kind of fit the market conditions to make sure that I'm not missing trades. Like for instance, this one I can make fit this current price move pretty much exactly by bringing it closer and touching these 3 points as well. So you have to ask yourself, is that the trend line or is this the trend line? If you drag it up here, it hits more points, obviously. So I think this is a possible trend line. Now, one issue is that price is coming again closer to our level here. It broke through last time, which is a good sign that we could see a higher high off this move to the upside. So I think that there's some potential there. But I also do want to give this some room to maybe come a little lower. Test this level even. Again, because of this this bearish reversal momentum. You saw how much momentum there was in the market. So the euro pound is one that I think that there's still some great buy opportunities. I want to take advantage of them, but because we had all of this reversal momentum, I mean this was really strong momentum. Because of that, I'm going to be probably waiting a while to take my euro pound buys. And again, probably going to be waiting until next week to trade really anyway, because it's still some lighter liquidity in the market. It's Thursday, so we're already late in the week. So it gives ourselves a few days to kind of take a step back and continue looking at these market conditions until we really get into the trades themselves. All right, so that's euro pound. There's some interesting interesting market conditions going on. I think that when you look across the market, there's a general state of confusion, and that's not extremely atypical because the market is a random moving machine. But it's interesting because the euro pound has gone up, and there's been a lot of a lot of momentum pullbacks. You can see that when it's pulled back, there's been a lot of momentum. And so, for instance, the euro pound, because the euro has been the stronger currency, when the euro is beating the dollar and going up against the dollar, it has moved more than the pound dollar. But in these pullbacks, where the pound has become stronger and pushed against the euro, the pound crosses, like the pound dollar compared to the euro dollar, has shot up a lot higher, and so that makes the correlation of the euro dollar and the pound dollar kind of interesting, and of course the euro pound chart very interesting, because even though we're in an uptrend, it seems like the momentum every time it switches, there's more bearish momentum to get back down to test the trend line than there is bullish momentum to continue the uptrend, which is an interesting little situation that we have there. So euro pound is one that I like to keep track of. Definitely shed some light on a lot of the other crosses that we trade. And we will, we'll get more into the actual trade setups once next week starts and there's really more liquidity in the market, more people are trading. I think that it's more than okay to take a continued seed out of the market at this point and just kind of wait for us to get our bearings a little bit more and then look for the actual trade setups. Right now, I'm just talking about a lot of potential, a lot of things that could or would or should happen. But starting next week, we'll be into a little more actual, great analysis setups that have legitimate entry possibilities and stop losses and targets and all of that. But for right now, it's very it's very potential and theoretical. Okay, so guys, that's that's all I have. I really just wanted to do some analysis, give you guys a chance to give me some feedback. So anything you want to share or give me feedback on or whatever, I'm certainly willing to hang around and discuss. But I really do want to wait until next week to get into the strategy and the info like that. So as far as me training and talking this week, I'm about through what I wanted to mention and discuss. Okay, well, if you guys don't have anything, I will shut it down here. And as always, feel free to jump into the Skype group and chat and mention and do or bring up whatever you wish. Oh, I didn't hear what Glenn said. Oh, sorry, Glenn, I missed it. Oh, wait a minute. I've been missing chat stuff. Oh, that's weird. I just noticed that my little chat over here is not updating. No wonder I'm missing what you guys are saying. Here, hold on, let me